gold is making a decisive move, surging past the $3,000 mark. What's driving this breakout? And is $3,000 the springboard for another rally or the beginning of a consolidation phase? Find out more in this week's As Good As Gold. Greetings, fellow traders. I'm Dylan, a research strategist at Pepistone, presenting the latest weekly update on As Good As Gold. Over the past week, gold has been dominated by the bulls, finally breaking through the long-anticipated $3,000 milestone. Hidden geopolitical tensions, uncertainty around U.S. tariff policies, and concerns over its economic outlook continue to fuel the demand for gold as a safe haven asset. This week's FOMC meeting and Powell speech on Wednesday will be key events to watch, as they could have a significant impact on gold prices. Looking at the daily chart of gold against US dollar, after 1.5 months of consolidation, gold surged last Thursday, followed by a decisive breakout above $3,000 the next day, setting a new all-time high. With 5 straight days of gains, the RSI is nearing overbought territory at the moment, and if the bullish momentum continues, the next level traders will be closely watched is $30.50. However, if profit-taking kicks in, the 5-day EMA and $28.80 could provide downside support. Gold's rally is due mainly driven by risk aversion, and just last week, I said in my video that gold would probably consolidate for a bit, and then it proved me wrong the very next day. It just shows how unpredictable the market has gotten. On the geopolitical front, with US-Russia relations show signs of easing and Europe's defense strategy is becoming clearer, tensions in the Red Sea have flared up, injecting fresh uncertainty into the global market. That said, the biggest wildcard remains the US tariff policy, for sure. Following the White House's decision to expand steel and aluminum tariffs, Trump has now threatened a 200% tariff on European wine imports in retaliation for the EU's 50% tariff on American whiskey. He has also reiterated plans for broad-based reciprocal tariffs starting April the 2nd, with additional levies targeting specific industries. The rapid shifts in tariff policies are creating ongoing uncertainty, which continues to provide strong support for gold prices. And beyond the unpredictable tariff and geopolitical landscape, weak U.S. economic data present a more tangible risk, I would say. While February's US CPI data came in below expectations across the board, with core inflation rising only 0.2% month-on-month and retail sales showing signs of improvement, at least for the control group, long-term inflation expectations tell a different story. The latest University of Michigan 5 to 10-year inflation outlook surged to 3.9%, the highest in over 30 years, while the Atlanta Fed further downgraded its Q1 GDP forecast. The specter of stagflation remains a looming concern. And at the same time, U.S. fiscal challenges cannot be ignored at all. The Biden administration's reliance on massive monetary stimulus is now showing its long-term consequences, with rigid expenditures making up 85% of total fiscal spending, leaving very little room for deficit reduction. In response, Elon Musk has proposed a 10% reduction in the federal workforce. However, given that the federal employees accounted for just 1.5% of non-farm payrolls, and considering the severance cost of mass layoffs, the actual impact on fiscal consolidation might be quite limited. Instead, such measures could dent market confidence and weigh on economic performance. So for now, rather than a dovish Fed boosting gold through rate cut expectations, it seems more plausible that safe haven flows, driven by economic growth concerns of the US, are playing a bigger role in supporting prices. Lutnick has hinted the government plans to take full control of the economy starting in Q4, but until then, markets are likely to remain quite volatile, further reinforcing gold's medium-term strength. So in summary, gold bulls have dominated the past week, driving prices past the critical $3,000 level. Given the White House's aggressive tariff policies and lingering uncertainty around the US economy, gold's path of least resistance still appears to be upward. However, with gold rallying over 16% in under a quarter without a significant pullback, the risk of a technical correction should not be overlooked. Additionally, with the U.S. government shutdown threat temporarily averted, risk sentiment has seen a modest recovery over the past 2 days, which could cap further gold gains in the short term. So looking ahead to key risk events, we are expecting a central bank bonanza this week with major monetary policy meetings from the Fed, Bank of Japan, and Bank of England, etc. Given the extreme uncertainty surrounding tariff policies, caution will likely be the central theme across this kind of central bank statements from my personal perspective. Markets widely expect the Fed to hold rates steady at the March FOMC meeting, making any potential adjustment to the dot plot and Powell's post-meeting remarks the primary focus. If Powell signals a dovish shift, gold could extend its gains. However, I feel like a more likely scenario would be that if Fed raises its inflation projections in the dot plot and Powell reiterates a patient stance on rate cuts, gold may face a short-term pullback. So that's pretty much all for this week. If this video was helpful, don't forget to subscribe, like, and spread the love. If you have any ideas on how the upcoming events might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!